Live from Bloomberg's World Headquarters in New York, welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance. I'm Sonali Basak with Michael Regan. Tim Stenovec is off today. Risk assets are recovering this Tuesday, but much is left in the wake of a global market meltdown. We're going to discuss how crypto performed amid all of the volatility. Plus, we're going to talk to Jeremy Allaire, the CEO of Circle, one of the largest issuers of stablecoins in the world. We're going to discuss his IPO planning and global regulation. And as Kamala Harris picks her running mate, we're going to discuss a Bloomberg report that shows how the crypto industry is spending millions to try and reshape the Democratic Party. And that's all ahead. But first, a snapshot of the markets in crypto. Of course, it has been a brutal sell-off for crypto as well. Bitcoin and Ethereum over 7 days have had a significant leg lower. Bitcoin now hanging out at around $56,500 here, about 14% lower. But remember, just yesterday, it dropped below that 50,000 mark for a while. Ethereum having a bigger drop at 22.9% over the 1 week, so almost 23%. Flip up the board here. Let's take a look at crypto-related stocks. Coinbase, MicroStrategy, Marathon Digital, and of course the spot Bitcoin ETF issued by BlackRock, all down in synchrony with Bitcoin. MicroStrategy just taking a little leg lower than Bitcoin on the week. A little bit of a levered play there. Of course, Mike, we also want to take a look at the flows of the ETFs themselves, because that all was bad there.
Yeah, absolutely. We did see some inflows into the Ether ETFs yesterday. So some people trying to buy that dip. If you remember, Ether really was the worst performing of the big tokens, down 23% or something overnight Sunday into Monday. So a little bit of flows in Ether, but still outflows from those Bitcoin ETFs. And if you look at that chart, the flows haven't been great in the last week or two, especially after the launch of these Ether funds. So it does seem like we might be sort of reaching saturation as far as how much Ether investors and Bitcoin investors want to get exposure in those ETF wrappers.
I want to flip up the board, also look at Bitcoin and gold, because it looks like Bitcoin really lost their narrative as a haven bid yesterday, didn't it?
Yeah, that's such a moving target, that narrative of is Bitcoin, does it correlate with gold? Does it correlate with tech stocks? It's not so much that it's uncorrelated, it's that it tends to have these sort of fleeting moving correlations. For a while, it really looked very tightly correlated to the sort of high beta, riskier tech stocks. Then for a couple weeks, it looked like it had sort of disengaged from that correlation, but boy, it came roaring back this weekend. And I think part of it, Sonali, is obviously, for better or worse, crypto trades 24/7. So if you need to raise cash on a Sunday evening, Bitcoin, crypto, Ether might be sort of the easiest way to raise some cash if you think you're going to have some margin calls on Monday.
Fascinating changes in narratives. We're going to talk more about it now with Delta blockchain founder and managing partner Kavita Gupta here, because of course you saw that sell-off yesterday. Mike raises this fascinating point about whether it's so liquid that it could almost be treated as cash in these instances. Kavita, what exactly happened here? Because it's hard to imagine people sitting around the world and using a carry trade to borrow yen to buy Bitcoin. Why did it sell off so much?
I think the combination of two things, Sonali. It is definitely a lot of crypto liquid token funds. You would see some of the biggest hedge funds actually liquidating big ETH positions because they were borrowed against somewhere in Japanese yen in their calculation all the way down to crypto. And crypto was doing consistently pretty decent at a good price and very liquid. So the combination of that, you can turn it around and have liquidity within seconds in your pocket because of blockchain. And at the same time, you can take care of your margin calls, which happen because of Japanese yen combined together. And also the data on Friday, which came out of the job reports, the whole anticipation of depression. I think the combination of all this stuff just wiped out the liquidity. The fascinating part is also something which you mentioned, that we did see $49 million worth of ETH ETF inflows coming in, and slowly the prices are moving up suddenly today and trying to rebalance itself. So it's been a very interesting Monday.
Kavita, I wonder if you have any sense of why Ether in particular performed so poorly Sunday night into Monday. Bitcoin was down a lot, but boy, Ether was down about twice as much, 20-some%. Is there any sort of fundamental or market structure reason why Ether was hit so hard in that sell-off?
In my personal opinion, the liquidity on ETH, both on centralized exchange and decentralized exchanging, with the amount of quantity and the volume required, was super fast. Secondly, I believe that Ether was doing very well, and the chances of going back into ETH and buying it at a lower price, both from the public markets and from the decentralized markets, were very high comparatively to any other altcoins, because you cannot have institution out there. Now, going back to Bitcoin, there is a lot of limitation to the amount of Bitcoin you can buy and how much would it go down, given how much supply has already happened on the limited amount of Bitcoin which can be produced. So Ether was an obvious choice for anybody who wanted to get millions of dollars, hundreds of millions of dollars very quickly, and able to go back into Ether at a lower price and have the same AUM. So it was a very obvious choice.
You know, you only have Bitcoin up, say, $10,000 per Bitcoin since those spot ETFs started trading. There have been significant drawdowns from the record highs that we have seen. At one point, it lost a third of its value here. So if you're a retail investor, you can understand people who have maybe been invested in Bitcoin in a long time buying into this narrative. These new ETFs and the retail investor interest, does this volatility spook them?
I don't think so, because this is, first of all, summer. You would see every year in July, August, the summertime, it's not a very big time for anything to pump up. Secondly, liquidity has been an issue because of all the expected in the past, the Fed rate cuts, which never happened. Now everybody's looking at September for that Fed rate cut. The Middle Eastern situation, the escalation of situation out there does not really get a lot of confidence in the market. And on top of that, we are still waiting from Vice President Kamala Harris's policy as a Democratic candidate on blockchain and crypto. I think the combination of all those things is more about wait and watch. And then when you combine it with margin calls unexpectedly coming from Japanese yen, we suddenly see a big down, but we are already seeing that it's slowly picking up. But at the same time, Sonali, if you look back in December, we are still very much up where we were just 7-8 months back. So we have not really reached that stage either, where ETH was lingering around 1,600 or 1,700 for almost a year or two.
Kavita, you read my mind there, getting into the politics there. I mean, we've had volatility in the markets, also a lot of volatility in the political world. And there seems to be some optimism in the industry that since Donald Trump has embraced the crypto industry so strongly, that it may influence the Democrat side a little bit to take a little bit of a softer regulatory touch towards the industry. I'm curious, how much can you expect that regulatory touch to change should Vice President Harris actually get elected? I mean, is it reasonable to think that all these SEC cases will simply go away? Or, how are you preparing for that eventuality or potential eventuality?
Yeah. In a reasonable world, it's very reasonable to think that they should have some sort of a position then instead of a black box as of today, especially because she's coming from California. She has always talked about tech and how to basically really on a positive side of tech. So it's a very reasonable expectations to have some positive expectations and regulation clearance or clarity from the campaign. But I'm actually already surprised that we haven't seen that yet. Now, maybe the VP choice is done and there can be more focus on how to look at blockchain and crypto. Otherwise, we Democrats are literally putting some of the brightest, youngest brains with a lot of potential and money to Republicans for just one issue agenda, which is not going to be.
Kavita, to that end, you had joined us recently. You said that you would be a single issue voter in this election cycle. You had mentioned that Trump's friendliness to the crypto industry would sway you in that direction. Does Kamala Harris now being on the ticket change your potential vote?
It does. I mean, as a woman of color, having a woman of color on the seat, and especially with her background in technology and the law enforcement, definitely she ideally is my preferential choice. But at the same time, if it is just going to be the same party rhetoric instead of the candidate and the leader really looking into situations, then that's going to be very disappointing for me personally, for sure.
Kavita, it's great to have you. That is Delta Blockchain founder and managing partner, Kavita Gupta. Now, coming up, we're going to talk to Circle CEO Jeremy Allaire to talk about stablecoin regulation and national security as that U.S. election approaches. A lot on the agenda there. We're also going to look at how super PACs with ties to crypto are spending millions to try and reshape Congress. And to access all the latest data and news on crypto, check out CRYP Go on the Bloomberg terminal. This is Bloomberg. bring in Circle CEO Jeremy Allaire. His company's USDC stablecoin has more than 32 billion in circulation, and I'm hearing that's more where that came from. Jeremy, thank you for joining us. You know, you had mentioned kind of in the commercial break that you've been seeing a lot of interest lately with more than $1 billion worth of stablecoin USDC minted in the last couple of days. Give us some specifics. What is that interest coming from?
Well, look, I mean, I think there are a lot of really exciting things that are happening. As noted, yeah, just in the past like 2 or 3 days, we've seen over $1 billion of net new USDC in circulation, just crossing 34 billion today, which is exciting. And I think there are multiple things going on that are market specific, which is obviously both people kind of in the risk off moment going into stable coins, and then obviously we're now seeing a lot of people kind of coming into the market, which is causing growth. And obviously USDC is one of the primary ways that people transact in the digital asset ecosystem. But the metrics are broader, actually. If you look at the trailing 180 days, the average monthly transactions with USDC that are happening on-chain, on blockchain transactions, is about $1.5 trillion. That's growth of over 220% year over year. And so the adoption of stablecoins and transactions on chain has really been seeing growth progressively over time. And we're excited because, obviously as the issuer of USDC, we're sort of seeing that growth potential really start to play out in a major way.
Jeremy, Circle and other stablecoin issuers have really been some of the beneficiaries of the higher interest rate environment of the last couple of years. You take the reserves that back the stablecoin and put it in treasuries and get a yield that is much higher than we would have ever guessed it would have been, 5-10 years ago. But I'm curious how now with everyone expecting the Federal Reserve to start cutting rates, Treasury yields coming down, does it affect your allocation strategy with what you do with the funds backing USDC?
Well, in terms of the actual reserve strategy, we're bound by law as an electronic money issuer, and we're also bound by specific prudential regulations of stablecoins. And so we have to stay inside that, which basically means 90-day or less, or sort of three-month T-bills, over collateralized Treasury repos and cash. And so USDC is a cash equivalent instrument, and that's really important. It needs to stay that way. And so we're always going to be bound by that kind of prudential regulatory framework. We're now bound by European regulations that require a set of constraints on reserves of stablecoins. We really think that's critical, that you have this digital cash instrument that people can depend on. In terms of the interest rate environment, our view is in some ways consistent with kind of monetary theory, and I think often even how banks think about this, which is, yes, in a higher interest rate environment, there's less sort of money velocity, there's less money moving in the economy, people park it on the sidelines, et cetera. But in a lower interest rate environment, there's higher money velocity, there's more demand for money, and money moves more freely. And we believe that we have created with USDC the highest utility value money in the world, and that will become even more evident over time. And so as you see maybe a more neutral interest rate environment, we actually think that that's a tremendous backdrop to expanding the utility of stablecoins, growing this from the roughly $150 billion of stablecoin, dollar stablecoin in circulation to what I believe over time can be trillions of dollars of value held in these digital cash instruments. So we see growth coming from a more moderate interest rate environment, and really we're focused on building out the largest, most widely used stablecoin network in the world, and we think that is going to be supported by a more moderate interest rate environment.
Jeremy, back in January, you said you confidentially submitted plans for an initial public offering. This has been a long-awaited listing when it comes to Circle. What can you tell us about your plans to go public and how soon you think it can get done? Do you have to wait until after an election cycle?
Well, a couple things. First, I can't comment on any specific regulatory engagements that we have, whether it's on that or any other matter. What I can say is we are absolutely committed to being a global publicly traded company listed on American stock exchanges. We've built our reputation around trust and transparency and accountability. It's one of the kind of critical things that has made Circle successful, made USDC successful, and we believe that being a publicly listed company under a U.S. kind of capital market structure is going to add to that trust, transparency, accountability, governance. Those are really critical things. If you're facing USDC, you're facing Circle, and we think that's a critical building block. So we're very, very committed to that.
Jeremy, there's a constant stream of reports about various banks sort of trying to develop their own version of a stablecoin, PayPal, whatnot, non-crypto native firms trying to get into this space. How much of a competition are those type of projects to Circle? And what sort of sets Circle apart from, a bank-issued stablecoin, or let's even say a central bank digital currency, which is, progressing in some nations around the world?
Yeah, so a few things. I think first, there really are no efforts in the United States to central bank digital currency. In the United States, the path really seems to be private sector intermediated digital dollars, developing a clear regulatory framework for that. That's actually kind of the regulatory model that's emerging all around the world. Payment stablecoins really being this kind of digital cash instrument that's going to be used. So we're I think, very aligned with the sort of direction of travel in terms of that. In terms of competition, I really focus on what we've built, how we've built it, and how we're going to continue to build, which is we really think about what we've built as a network, as a stablecoin network. And it's a platform that's openly available on the public internet to developers, to entrepreneurs, to builders, to enterprises, to established financial and commerce firms. And they can build on that open blockchain infrastructure and integrate that into their own applications. We've seen through that process over the years, and really, we believe accelerating now, really powerful kind of developer flywheels and network effects. You sort of see this with internet platforms and internet utilities. We really, again, think about USDC as a broad-based open internet utility for dollar settlement. And those network effects are really strong. The more people who've got apps and wallets and services that plug into USDC, the more value USDC has.
Jeremy,
and that's really been our strength.
To that end as well, one place you see that very prominently where you plug in is when it comes to Coinbase, when it comes to Base, when it comes to the ability to facilitate transactions via USDC at a very low cost, in some cases zero, in many cases zero.
Yeah.
What does that mean? Does that change the game for you at all to start seeing transactions via Coinbase in that manner, and how does that evolve?
Well, I mean, the vision of the company from 11 years ago when we started was that we would be able to build a protocol for dollars on the internet, and that would work on these public blockchain infrastructures, and it would provide both a very, very efficient way to use money and obviously a high utility way through programmability. But very specifically, our belief was that over time, the marginal cost of storing and moving value would approach zero. In the same way that the marginal cost of storing and moving information or communications or media or software now approaches zero. That unlocks an incredible amount of utility, of velocity of money. And so we're now hitting that point. We're realizing that founding vision of the company. It's not just on the Base blockchain, it's on many Ethereum L2s, major L1s like Solana, Avalanche, others. So we're seeing that sub-second, sub-penny, or kind of transactions with global reach. It's a really extraordinary thing that we're reaching this point. And so our view is that this is going to drive the highest utility value money in the world, and will grow the power of these networks. And it's going to make this a really compelling medium of exchange for businesses, for financial institutions, payments firms, and just for everyday people and households that want to transact around the world the same way that they can communicate with a WhatsApp or an iMessage or other tools and utilities on the internet.
Jeremy, we have to leave it there, but certainly very many questions in my mind about how you might be taking on PayPal more in the future. Circle CEO Jeremy Allaire, we thank you so very much for joining us today. Now, coming up, crypto groups have spent some $45 million on congressional primaries for both parties. We're going to break down the growing crypto lobby. And I want to mention that we also just hit session highs on equities, looking at those gains in the S&P 500, nearing 2% on the day. You have traders really shaking off those carry trade fears that really pervaded the market yesterday. Stick with us, more crypto ahead. This is Bloomberg. industry is spending millions through a pair of super PACs to shape Congress by intervening in congressional primaries. Of course, that's where the real money goes to change policy. Bloomberg's Bill Allison reported on what's going on here, and the dollars are large. How large are they exactly?
Well, so there's about 45 million that's been put into these different primaries around the country, both Republican and Democratic. About maybe, and more money is going to Democratic primaries. About 25 million or so with the latest figures. And the industry is very interested in influencing both the Democratic Party and the Republican Party.
Bill, when you tally up all the money coming in from the crypto industry, as the screen shows, 170 million to Fairshake and some of the other PACs, how does that sort of size up compared to other industries? Is crypto all of a sudden one of the biggest spenders on campaigns among the big industries in the U.S.?
Yes, it is. I mean, it's, if you compare it to like defense or healthcare, pharmaceuticals, it is right up there, and it's in the upper tier now of industries. And given that it's a fairly narrow segment of the economy in terms of jobs and its relationship with government, as far as how much it's regulated, it is spending a ton of money.
You and I remember when it was the FTX executives that were really spending the bulk of the crypto dollars here. Who are the new kids in town? I mean, who are the people now that are stepping up to shape the way this looks?
Certainly Coinbase has been very big, giving $25 million in one slew to Fairshake, and its CEO Brian Armstrong. Andreessen Horowitz have also been big donors, supporting crypto from the venture capital side. We've also seen Ripple Labs making big donations. It's much broader in the industry than it was in the 2022 election cycle.
Bill, we have to leave it there. We thank you so much for your time, for all of your reporting. Of course, it is making a dent, Mike, in the crypto industry, as well as the elections and potential policy going into next year.
That's right. And all that money comes a whole lot of noise, a whole lot of talking from this sort of online army of crypto warriors out there. So it's a big deal.
That does it for Bloomberg Crypto today. Join us next week, same time, same place. This is Bloomberg.